gold will now outperform, as it has done in the last 25 years, in the whole of this century. Gold will outperform every asset class in the coming 5 years, 10 years, or whatever. And at the same time, it will be protecting your wealth as the most stable form of investment held by you personally or controlling it personally and not within the financial system. 25% in silver. I think you could go up to 30% now in silver relative to gold. I'm talking. Silver is now going to go up much faster than gold.
Gold has outperformed every major asset class so far this year, up 25.9% YTD and 5.7% in Q2 alone. According to Invesco's Q2 2025 gold report, the traditional financial order is beginning to crack beneath the surface, and astute investors are already repositioning away from conventional wisdom. From Federal Reserve hesitation on rate cuts to central banks quietly accumulating gold reserves, the warning signs are unmistakable. The currency crisis that policymakers have postponed through endless intervention can no longer be delayed. Egon von Greyerz, a sharp-witted financial analyst known for exposing mainstream economic fallacies, is now raising the red flag, and his analysis suggests the collapse will unfold more rapidly than the market anticipates. In this deteriorating landscape, faith in fiat currencies and government debt is systematically breaking down. The US dollar's purchasing power continues its relentless decline, while Treasury markets face unprecedented strain from over $1 trillion in annual interest payments, a burden that grows exponentially with each passing year. Meanwhile, policy uncertainty has reached record levels, and any further shock could trigger mass liquidation across traditional assets. Once that cascade begins, central banks will be forced into desperate measures, regardless of their stated commitment to fighting inflation. What propels precious metals isn't simply geopolitical tension or temporary inflation spikes. It's the fundamental breakdown of the monetary system itself. As confidence evaporates and currency debasement accelerates, gold becomes the destination for global wealth seeking genuine preservation. Egon warns that with $100 trillion in potential debt and 10% interest rates, the US would face $10 trillion in annual interest payments, an impossibility that guarantees either default or dramatic currency devaluation. His message is clear: this isn't about gold going up, it's about fiat currencies collapsing in real terms. Before we explore this critical analysis further, make sure to like this video and subscribe to our channel for weekly insights on the unfolding monetary crisis.
What investors have to realize is that they shouldn't look at a gold price and a chart of gold going up all the time and gaining value. They should just turn the chart upside down and see the dollar and all the other currencies collapsing. And that's what's happening. And that is going to accelerate, just as it did, as you mentioned, in the Weimar Republic and in any hyperinflationary economy. So what we're looking at is not inflation, is not gold going up. Protect themselves in gold and silver. Now, and unfortunately, Jan, investors are still much more interested in making money rather than preserving wealth, because they don't understand the need to preserve wealth, because they made so much money in stock markets, in property markets, in bond markets, in private equity, etc. So they still believe that that will go on. Shangri-La is here forever. But that's not going to be the case. So if for investors who still believe that they want to make money, well, turn the gold chart back up again and show gold going up instead of the currencies going down. And gold will now outperform, as it has done in the last 25 years, in the whole of this century. Gold will outperform every asset class in the coming 5 years, 10 years, or whatever. And at the same time, it will be protecting your wealth as the most stable form of investment held by you personally or controlling it personally and not within the financial system. It's such an easy solution to a massive problem, Jan, and this is what people should do. So they will both protect their wealth and enhance their wealth substantially, because gold, as I said, will gain relative to all their other asset classes considerably. That includes stock markets, bond markets, property markets, etc. That's what we're going to see in the next few years. And the ones who are actually jumping on that gold wagon, they will benefit, and the ones who don't, they will suffer. it's not coming from a gold bug. It's coming from one who understands the risk and who understands wealth preservation and who spotted this already 25 years ago when gold was 300. We're now in a new phase for gold. It's like a paradigm shift because we have now BRICS countries, major investors, institutions, etc., who are all going to go into gold to protect their assets, and there is not enough gold around for all of these people joining. Therefore they can only be satisfied by higher prices, not by more gold, and that's going to happen in the next few years. When I extrapolated the current debt situation in the US, so we're now 37 trillion. I actually, when it was 20 trillion, I said we're going to go to 40 by about this time we're now. So it's so easy to extrapolate because it goes up by such a predictable amount every year. In that graph, I showed that I think US debt will probably be around 100 trillion in 2036, I think I said. And I think interest rates will be at least 10%, then I think they'll be higher. Or certainly, if not exactly on that date, during the period leading to that, because it will be high inflation and there's no way of financing that increase in debt at 1%. No one's going to give the US any money at 1%. So with that risk involved. So if you're taking 100 trillion and 10%, and I think 10% is low, then you're talking about then you're talking about 10 trillion in interest costs. Now we have 1 trillion. It's going to be 10 in a few years' time. And that's what the US is looking at. So we're looking at a nation which is going to default or go bankrupt. They will not declare bankruptcy. They will just say that we defer all the debts and we're not going to pay you for the next 20 years or so. That's what they will say. But of course the dollar would show what's happening, or whatever currency at the time there is, if there is a cryptocurrency, because that will decline dramatically. Just said it. I mean that the world is hopeful for the wrong reason. They fix on one single thing, like, well, the tariffs might not happen at the massive level that Trump is threatening on a daily basis, and also changing on a daily basis. But the stock market is totally out of proportion to any risk that I'm seeing. As I just outlined a couple of minutes ago, the risks are major. The stock market doesn't belong where it is now, but it, of course, is all linked to money supply and the flow of money, and there's still too much money around, and that's why the stock markets are high. At some point, whether it's in a month's time or whether it's in 3 months or 6 months, the stock markets are going to come down substantially. And over time, as you know, I believe that stock markets, in relation to real money, that is gold, I think stock markets are going to go down at least 75 to 95% before this cycle is over. But that will take some time. But that's the risk we're looking at here now, Jan.
While gold continues to serve as a cornerstone of wealth preservation, Egon von Greyerz identifies silver as the more explosive asset in the next leg of the precious metals bull market. Silver recently surged past $39 an ounce, reaching its highest level in nearly 14 years, driven by tightening physical supply and growing geopolitical tensions. According to Egon, this is just the beginning. It won't stop at $50 this time, he emphasizes, projecting a prolonged upward move. ETF demand reflects this trend, with over 2,500 tons added since February, signaling strong institutional interest. At the same time, Egon draws attention to a silent shift in global gold reserves. While the United States has neither added significantly to its gold stockpile nor fully disclosed leasing or sale activity from its 8,000 tons, China and Russia have been accumulating aggressively. Each officially reports holdings near 2,000 tons, but analysts, including Egon, believe actual reserves could be 10 times higher. China alone has grown its gold reserves nearly sixfold since 2000, reaching 2,292 tons by early 2025. For Egon, this trend reflects a deeper shift, a move by BRICS nations to replace dollar-based assets with physical gold, signaling a long-term transition in global financial power. Let's get back to the interview.
Follow the money means the only money that's ever survived in history. not the funny money that now the Trump administration is trying to install into the US with crypto money, electronic money, or whatever it will be. That's not money. That will not be around 5,000 years from here. Follow the money, the only one, the nature's money, which is gold, and follow the people who actually invest in gold. The US hasn't bought gold for decades. And probably sold or leased a big part of their 8,000 tons that they're officially declaring. Whilst China and Russia, who are declaring around the 2,000 tons, both of them as official gold, probably have 10 times that, both of them. Gold doesn't solve everything, but it shows power. Gold has always been power and economic power. And therefore, in the end, also political power. That's going to be, and the whole of, as you said, the BRICS nations were doing the same. So they're going to continue to invest in gold. They're going to continue to replace dollar reserves, the central banks in the BRICS countries, with gold instead. So gold is going to continue its journey upwards. I hope it doesn't go too fast. We don't want that. We want just a gradual increase in the price over the next few years, or 5 years or 10 years. As I've said many times, Jan, gold will go up by multiples. For people who also want to make have a bit of fun in a safe investment, they should buy some silver now. We always recommend that you shouldn't hold more than 20 to 25% in silver. I think you could go up to 30% now in silver relative to gold, I'm talking. Silver is now going to go up much faster than gold. And so that's also wealth preservation. More volatile than gold, but nevertheless also a very interesting investment. So that's what we recommend to investors. Hold your main part of your assets in physical gold outside the banking system, and hold up to 30% or so in silver, because we are going to see a real ride in silver. And that has started now. We're now at just under $40. We are going to see, it's not going to stop at 50 this time. It's going to go much higher than that. For a very long time. So it's a very interesting opportunity of combination of wealth preservation and massive appreciation potential also. Interest rates at 1%, they're pumping out money in the trillions on a yearly basis here. And that money, as we know, will never be repaid, and they need to borrow unlimited amounts of money, and the deficit and the debt will increase exponentially. And that doesn't go hand in hand with a 1% interest rate. First of all, Powell will never, as long as he's there, he will never allow that. So Trump is either planning to fire him, and he can't really fire him because then the markets will not accept that, and that will be very bad for dollar, for stock markets, etc. So they're now working on a plan that the US Treasury and the Fed is going to merge in one way or another. I think that's the longer term plan, and that could happen in one of these executive orders overnight, I'm sure. And again, I'm sure it's against the Constitution, but Trump has never worried about the Constitution. He just issues another executive order, which is not in line with the US Constitution. It's possible that here, as I said, that they are working towards not just replacing the Fed or merging the Fed, giving the Fed less power and therefore more power to the government. And this government is constantly just grabbing more and more power. And then you know what they're doing also with cryptocurrencies and stable coins, etc. And also Trump, of course, the whole family is totally involved in everything crypto there is, and hoping and planning to make billions or more out of these currencies. That is very corrupt when the administration gets involved in these kind of schemes, or the family of the administration. So and therefore they're hoping to gradually get rid of the dollar. That's, in my view, that's one plan, and then replacing it with stable coins. So the dollar is gone, and here we have a new stable coin. Yes, maybe backed by treasuries, but it's like a new currency. And because CBDCs, the central bank digital currency of the US, will never issue. They've said that. So therefore, instead, they will have their own cryptocurrencies. Cryptocurrencies are not going to, cannot be the money of a country. The electronic money is always going to be fiat money and always going to be manipulated in a way that will make the country suffer. So, there's so much going on here, Jan, and it's all in order to finance a deficit that cannot be financed. So, 1% interest rates, you cannot borrow anything. No, there's not a single investor who will buy a US Treasury at 1%. So they will try to find other ways of just printing money and creating other instruments. It's not going to work. You will see the dollar collapse. You will see stock markets collapse. And obviously, Treasury bonds will collapse also. And instead, interest rates are going to go much, much higher. I've always been of that view. They're not going to stay at current 4%. They're going to be in the teens or much higher as the US is on the route to defaulting. There will be periods in the next few years when there'll be no gold available at any price. That's not going to be for long periods, but there'll be short periods when the demand is such that there's no supply to satisfy it. We will see that, and then it will balance out for a while, etc. But overall, it's going to be harder and harder to get gold, and of course with silver even more so, because the silver in the world, total silver in the world is so small that market is going to explode at some point.
Egon von Greyerz believes we're not witnessing a rise in gold. We're witnessing the collapse of fiat. The illusion of strength in Western currencies is unraveling under the weight of decades of debt, monetary distortion, and political mismanagement. While the U.S. clings to its official 8,000 tons of gold, much of it likely leased or long gone, China and Russia are quietly stockpiling far beyond their declared reserves, positioning for a monetary reset where gold returns as the foundation of a new global system. Silver, Egon argues, holds even greater upside. With industrial demand rising, supply chains tightening, and years of price suppression breaking down, silver could vastly outperform gold. His strategy: hold physical gold outside the banking system and allocate up to 30% to silver, real metal, not paper. This isn't just inflation protection. It's prepositioning for a shift in global capital flows. Wondering how to navigate the storm brewing in global markets? If you found this analysis insightful, don't forget to like the video, subscribe to the channel, and share it with fellow investors who need to be in the know. We'll keep bringing you top market thinkers and the critical insights you need to stay ahead of the curve. Thanks for tuning in.